Check this out. Altcoin markets are sending mixed signals right now, and the data is wild. Bitcoin's hovering around 89K, but we're here to talk about the real action, which is happening in ETH, SOL, and the altcoin trenches. Let's dive into what's actually moving these markets today. Ethereum sitting at around $2,058, down about 3% in the last 24 hours with some serious resistance ahead. The key level everyone's watching. ETH needs to hold above 2,900, or we're looking at a retest of 2,800 support. RSI on ETH is sitting neutral at around 48, not oversold yet, but momentum is fading fast. Here's the thing. Ethereum active addresses just crossed 800,000 daily, which is actually bullish for long-term fundamentals. ETH gas fees are sitting at historic lows around $3 to $4 per transaction. Layer 2s are eating the mainnet's lunch. Now let's talk Solana. SOL is trading around $130 with a 2% bounce after getting hammered earlier this week. SOL broke below the critical 130 support level temporarily. RSI on the 1 hour is at 65, showing short-term overbought conditions. But the 7-day RSI is neutral at 49, which means we're in no man's land right now. Solana's seeing continued ETF inflows though. 1.71 million came in on January 22nd, while BTC and ETH saw outflows. Look at this. Chainlink is one of the quieter movers, but Link's holding steady in a consolidation phase. Avalanche is sitting at $12.15, up just 0.34% in 24 hours, which is basically flat. AVAX has resistance around $13 and support at $11.50. Tight range, but volume is drying up. Arbitrum. Now this is where it gets interesting. Aave is trading at just 0.21 cents with bearish sentiment dominating. ARB's RSI is at 41, which is neutral territory. But the fear and greed index for ARB shows 29, which is extreme fear. Here's the opportunity. ARB has a TD sequential buy signal at the 0.175 support level, suggesting seller exhaustion. XRP is the crowd favorite right now, sitting at $1.92 near a tight triangle pattern. Breakout above 210 could send XRP flying, but a breakdown below 1.80 opens the door to more pain. XRP funding rates are negative on Binance. Heavy short positioning, which could trigger a short squeeze. Cardano's holding 36 cents, up slightly but still stuck in a longer-term downtrend with weak momentum. Now let's talk liquidations, because this is where the blood is in the water. In the past 24 hours, Solana futures saw $16.3 million in liquidations, with longs getting crushed. Bitcoin liquidations hit $12.9 million. But remember, we're focusing on altcoins here, and that's where the real carnage is. Funding rates across major altcoins are mixed. Some, like XRP, are negative, showing bearish positioning, while others are neutral. The liquidation heat maps show major clusters around key psychological levels. Whales are hunting stops aggressively. Whale activity is fascinating right now. Let me break this down. ETH whales accumulated over 900,000 ETH in recent weeks, according to Sentiment. That's serious accumulation. Exchange balances for ETH are at multi-year lows. Coins are moving off exchanges, which is typically bullish. SOL and XRP ETFs continue seeing inflows, while BTC and ETH ETFs bleed. Capital rotation is real. XRP saw $1.5 billion removed from circulation last week. Supply shock mechanics are in play. Large transfers over $10 million are spiking on Ethereum. Institutional money is moving, but quietly. Now here's where it gets really interesting. DeFi yields are screaming opportunities right now. Aave lending rates are variable by asset, but you're looking at an average of 7.7% APR on deposits. Stablecoin lending on Aave can hit up to 13% APY depending on utilization. USDC and DAI pools are hot. Compound Finance is offering around 4.54% average APY, lower than Aave but more stable and battle-tested. Venus Protocol is expanding across 8 blockchains with 65 markets. Rates vary but competitive with Aave. Here's the pro tip. When utilization rates spike above 80% on lending protocols, APRs can jump to 20% or higher. Borrowing rates are the flip side. Variable rates on Aave adjust based on demand and can get expensive fast. The key is watching the utilization rate. Optimal is usually 80–95% where you balance liquidity and yield. Flash loans on Aave are still a thing. 0.09% fee, and you can borrow millions with no collateral if you repay in one transaction. Uniswap V3 is where the concentrated liquidity game is at. Let me explain why this matters. V3 pools offer up to 4,000x capital efficiency compared to V2. You can earn way more fees with less capital. Top pools right now are stablecoin pairs like USDC-DI with 0.05% fee tiers. Tight ranges mean consistent fees. ETH USDC pools on the 0.3% tier are seeing massive volume, over 500 million daily on Ethereum mainnet. The trick with V3, you need to set your price ranges tight around current price to maximize fee capture. But here's the risk. If price moves outside your range, you stop earning fees and face impermanent loss. Active management is key. Successful V3 LPs rebalance their positions weekly or even daily. On-chain metrics are painting an interesting picture. Let's look at the data. Ethereum daily transactions hit 2.88 million on January 16th. Network activity is surging despite price weakness. Total value locked across DeFi is holding strong. Ethereum still dominates with over 100 billion in TVL. Gas fees on Ethereum are at 0.034 GUI, basically free, which is wild and shows Layer 2 success. Active addresses across major chains are healthy. This is real usage, not just speculation. Now the macro picture, because this is what's really driving everything. The Fed is holding rates at 350–375 basis points with 82.8% probability at the January 28th meeting. No cuts expected. Dollar liquidity is the name of the game. Arthur Hayes says Bitcoin needs expanding liquidity to rally. Geopolitical risks are spiking in early 2026. From Venezuela to energy markets, volatility is high. Inflation is cooling but sticky, which keeps the Fed cautious and limits risk-on flows into crypto. Expert takes are all over the map right now. Let me give you the highlights. Arthur Hayes is bullish on 2026. He says dollar liquidity expansion could push BTC to 110K or higher. Hayes is going long on MSTR and Metaplanet as leveraged Bitcoin plays. He's betting on a rebound. Vitalik is focused on Ethereum upgrades in 2026. Verified RPC, stateless clients, and privacy features are shipping. The consensus view, institutional adoption is real, but macro conditions will dictate timing. Looking ahead, the next few weeks are critical for altcoin direction. If Bitcoin breaks above 95K, expect altcoins to catch a bid and liquidations to flip bullish. But if we break below 88K support, alt season gets delayed and we could see another leg down. The smart money is accumulating on dips. DeFi yields are attractive and fundamentals are improving. Watch the Fed meeting on January 28th. That's your next major catalyst for crypto markets. Remember, this is educational content only, not financial advice. Always do your own research. Drop a comment below with your top altcoin pick for February. And smash that subscribe button for daily crypto analysis.